Good morning, everyone. The name is Kwek. Andrew has given the introduction. Thank you, Kevin and Andrew, for inviting me. I was originally going to speak on the USTR panel. That panel was unfortunately cancelled after the postponement of the USTR port charges. So I've asked to moderate this panel, which is quite relevant, despite what happened the last few months, where we saw refinancing activities around ships financed by Chinese leasing companies. China remained a top target for international ship owners, be it for new buildings or owners seeking financing options. 2 weeks ago at Maritime Busan, there was a similar panel where the panelists were asked if Korean shipbuilding and financing stands to gain from the ongoing geopolitical tensions. So today we're joined by 4 panelists who will give us the Chinese perspective. If the panelists could give a short introduction of who you are and a short introduction of your organization, if we start with Mark.
Thank you very much, CK, and thank you, Marine Money, and my apologies for walking a bit late. I'm Mark Teng. I'm the Chief Financial Officer of SeaKapital. We are a relatively new comer, but the founders, Kenneth Lam and Sabrina Chow, should be no stranger to a lot of us here. We are a Hong Kong ship leasing company, but we are very flexibly doing both finance as well as operating leases. We have now approximately 22 ships, both new building and on the water, working together with partners such as SeaKon here in China. We do a wide variety of ships with both a financing and operating angle. Thank you.
This way? Yes, yes, John.
Hello, I'm John Kollander, and I represent the Swedish Shipowners, Stena, which is a conglomerate, you can say, in Sweden with 22,000 employees and a turnover of $10 billion about. I'm the head of China for Stena's activities, including the finance activities. And in China, we have about 100 employees. And Stena is building ships, operating ships, chartering out ships. It's mainly in the passenger ferry, short sea ro-ro, tankers, and offshore segments. So Stena is also here in China financing part of our existing and part of our new buildings in China. So that's short me.
Good afternoon, and thank you to Marine Money, Kevin especially, for inviting us here. I'm Captain Alok, Chairman of Alphard Maritime Group. We are ship owners, currently 14 ships, but we do not focus on any sector. We are opportunistic buyer and seller. Last 4 years, I have bought and sold 80 ships. So any sector where we see that we can make money, and we have capability to operate all kind of ships. So any sector where there's opportunity at low entry level, we buy, operate, and when market is up, we sell. Thank you very much.
Hello, everyone. Thank you, CK and Marine Money, for the invite. I'm Wei Hong Lim, Lin Wei Feng. I'm the Senior General Manager of Commercial Development for Pacific Carriers Limited, PCL. We are in both dry bulk shipping as well as product tankers. And PCL is part of the larger Kwek Maritime group. So within the group, we have our sister company, Posh, that looks at offshore vessels, as well as we have our own shipyards under Pax Ocean. So we have 5 yachts, 1 here in China, Zhoushan, 1 in Singapore, and 3 in Batam.
Thank you. If we start with you, Mark, among the panelists, SeaKapital has a very China-focused identity. You're building ships here in China. By USTR definition, you are a Chinese leasing company. And you rely quite a fair bit on Chinese financing, and quite a number of your ships are also chartered to Chinese counterparts. So what makes China shipbuilding and financing ecosystem so attractive to SeaKapital? And you have a ship finance background with a European bank. So how do the Chinese lenders compare to traditional bank financing in terms of flexibility, risk appetite, relationship management?
Thanks a lot, CK. I hope we have an hour and a half for me to go through all the points. But first of all, I think Chinese, if you talk about, let's start with Chinese shipbuilding and Chinese financing. Just look at the ecosystem. China is the largest shipbuilder in the world. It is the second largest ship owner. And the myriad charterers, ship managers, insurers. I mean, it's a full and mature ecosystem by anyone's standard. For us, we're very grateful that in Hong Kong we can take advantage of this by virtue of proximity and familiarity with the Chinese market. It is also a market that today is very mature. If you look at, I started in shipping 25 years ago with a European bank, and at that time, I think we saw, on an upcycle, you see, shipyards getting built on the beach. You'll see people with no experience whatsoever coming into shipping. But this time it's very different. I think China's ascent on this cycle has been built on a very stable foundation. In terms of shipbuilding, we see that the capacity has been increased not through new yachts popping up in random places that you have to Google Earth, but instead building upon existing capacity with experienced shipyards, with expertise and design. On the financing side, it's the same story. We do see new entrants, but in our conversation with them, we do see that they are staffed with experienced people. And that makes a really big difference for us. When you're in shipping, when you're in any sector for a very long time, within 5 minutes you can tell if somebody is really committed to the industry. And in finance, especially in China today, whether it's leasing companies or banks, we really see that there's somebody that immediately you can click with. Another welcoming development, I think, is also to answer the risk appetites of banks, which I think was one of your questions. It's interesting to see that in the risk departments of these banks, we would also see people with real shipping expertise, somebody who knows a bareboat from a time charter, right? And you don't take that for granted. In European banks, where we're used to having specialist teams, product teams, that's a given. But even in the risk department, you don't always see people holding the pen upstairs really have a good grasp of the shipping market. So that's a really welcome development. And especially for relationship management, because you know the people you're talking to understand the message you're trying to convey.
John, if you can give us your opinion on the same subject, but from a non-Chinese owner perspective. No doubt Stena is an owner with choices. You have chosen to build a significant part of your new buildings in China. You have also tapped on Chinese financing. So if you can share with us your perspective.
Yeah, thank you, CK. I would say for Stena in general, China is the first choice where we will build ships. And historically, we have built our ro-ros and passenger ships at China Merchant Industries shipyards, and tankers at the CSSC GSI shipyard. So I would say Stena, of course, can in theory shop around, but we honor long-term relations with the shipyards, and so far the shipyards have treated us with excellent service. So I could see that Stena will stay in China and also stay with the same shipyards. That was your first topic. And then about the financing side, Chinese financing have been, since almost 10 years back, one of our alternatives when we finance our new buildings, and to some extent also resales, but mainly new buildings. And I foresee that it will stay like that. Of course, every one of us working with this have heard from our head offices what about the China risk and how do we mitigate the China risk. A little bit unspecified what is the China risk at that time. But I think, at least for me, after Trump come to power, I've not heard that question anymore. It's more about mitigating the risk from US for a Swedish ship owner like Stena. So my prediction is Chinese financing will continue to be a great part of Stena's financing, mainly for new buildings. It will not decrease, at least. So that's my take.
Thank you very much. Captain, you have invested very successfully the last few years, buying, selling vessels, and most of them were Chinese built. Given what happened recently, geopolitically, when you make your next acquisition, would that have impact where the vessel was built, whether it's a Chinese-built ships or non-Chinese-built ships? And as a owner investor, so far, I think you have considered, you have discussed with Chinese financier, but you have so far not tapped on Chinese financing. Can you also share with us your considerations?
In the beginning of this year, everything was hazy. You can't take a real decision. In fact, beginning of this year, I negotiated for Kamsar Maxes, but dropped the deal because of this USTR. But mid this year, in month of July, I acquired for handy-size Chinese-built. What happened because of this USTR, the gap between Chinese-built vessel and non-Chinese-built vessel increased, maybe from 10% to 20%. And I thought this is the right opportunity to go and buy the Chinese ships. So I got it at least 10 to 15% lower value what it was, and now the same vessels are already appreciated by 15 to 20%. So that's on the strategy for buying Chinese ships, and I still feel it's a good buy. Regarding Chinese financing, I have no hesitation to say if the price is right, you should go for it. When you buy a ship, it is not for 2 year or 5 year, looking for 15 to 25-year horizon. And this geopolitical situation, all these things will keep changing within a year or 2 or 3. So we cannot change our decision for a policy which has come today, and you don't know how long it is going to stay. So what comes cheap today, that is what is my policy to go ahead. Thank you.
Wei Hong, you are a ship owner, an operator, and also a shipbuilder with a yacht in China. And you have also chartered in a significant number of ships from Chinese lessors. So do Chinese yachts and financiers offer a different value proposition compared to other markets that you operate in? What's the strategic value of owning a yacht in China? And would you consider investing in yacht facilities in the US?
I think a lot of us mentioned this, and Kevin in his presentation as well, that China is the global leader in shipbuilding today. So about 60-70% of new building orders are essentially with Chinese yachts. In terms of how we look at Chinese yachts, I think definitely they provide us a degree of flexibility. For Japanese yachts, South Korean yachts, there tend to be a more cookie-cutter approach. They prefer sort of a standard specification that you don't deviate too much from. But our experience with Chinese yachts, including our own yachts, of course, this is where you can sort of customize your requirements, your specifications based on your cargo requirements. I think that is really important for us. In terms of the other point I would like to make is, like what Mark mentioned, it's really an established ecosystem, right, for Chinese shipbuilding today. And we look at it from a technological front as well. I think the Chinese shipyards have really progressed from a technological perspective. So when we look at retrofits or dual-fuel propulsion, there is an established ecosystem here to support a lot of these projects. Our own shipyard last year, we did the methanol dual fuel retrofit for one of the feeder companies in Singapore. And that shows the level of technological development for Chinese shipbuilding. In terms of the strategic value for us as a owner or a maritime group, definitely, I mean, our yacht sort of provides the kind of engineering and technology kind of expertise and that we can lean on when we are looking at building ships for our own requirements. And again, going forward with the energy transition as well as the effort towards reducing carbon emissions, I think retrofit is going to be extremely important for owners with existing vessels on the water. And this is where having that edge, the technological edge, understanding the retrofit technologies that's evolving, and being able to secure our own yard space for retrofit projects, I think that is the kind of a strategic value of having your own shipyard as well. Your last question on, I would like to say that we are still very much an Asia-based conglomerate, that we predominantly sort of operate a lot of our enterprises, not only on the maritime side, but our other business, may be hospitality or logistics or agri-food. We tend to play better in the Asian region, and we just sort of, we like to focus on areas where we do well, and we sort of understand the local context for some of our operations.
Going back to you, Mark. So you're now a few months into your new job. How have your perspective on risk and capital deployment changed since moving from a ship finance position to your current role? And do you see Chinese leasing evolving into more equity-style risk-taking as compared to what fundamentally was a credit-driven, like bank lending?
Yeah, thanks, CK. You and I both have emerged from our chrysalis of European banking. And it's interesting, I always tell people, 25 years ago, banking was actually more similar to what we do today, which is looking at the full capital stack. So you have senior secured debt, you have mezzanine, you have a little bit of equity, and back then banks could look at all of that. But as time went on, there's regulations, pressure, and more banks today focus more on the senior secure space. So for us, we are able to look at all of it. We do look at the mezzanine part. We do look at the equity portion on some of our operating lease deals. And it's been, obviously for me personally, very enriching, multiple learning curves to look at. But if we talk about more general context, looking at the Chinese leasing companies, it's a very wide spectrum when you say, equity style financing, right? You can start from those who are just dipping their toes in the water. Because for equity style, I guess we're really talking about two things. Your spot market earnings and your operating costs, as well as the residual risk. Those starting out, those financial institutions starting out looking at equity risk usually starts with residual risk taking. So we're talking about after your lease expires, who takes up the residual risk? Is there a purchase option or purchase obligation at the end of 5, 10, or 15 years, what have you? And that we definitely see. A lot of leasing companies are telling us that this is something they're willing to look at. Because it's relatively simpler. Somebody upstairs has to approve this, you go through the process, and that's it. Where things get a little more tricky is if you start to take more equity risk in terms of operations, in terms of taking time charters, in terms of getting ships and putting them into pool arrangements. People do that. We do see, we saw someone sitting here just now talking about that. But that requires real operational resources and deployment. You need to hire even if you employ your ships, you manage your ships through third-party managers, you need someone to manage that. And that's what we're learning as well as we go along. But going back to your first question, China has such a diversified and open ecosystem. We're seeing a little bit of everything, and that's a deeper subject, I'm sure.
John, there was a time when the people here on the stage, when we first started our career, you go to China to build a ship because of the price point, because you're able to get a ship fast. We heard earlier from you that you obviously have a favorite yacht here in China. So you has moved from being transactional to having a more strategic type of relationship with the yacht. So what will it take to be a preferred partner for Stena? And how does that fit into your decarbonization needs?
Okay, thank you. Regarding decarbonation, as many of you know, we have the Fuel EU Maritime legislation, which is, I would say, as strict as the IMO regulations. That was not approved, but delayed. So we are living under this today with our European operation, and I would say we roughly have 60 ships that are trading intra-European. So this is a big concern for us, and we have adapted to quite some extent by building ships now with battery packs installed and dual fuel, both LNG and methanol dual fuel versions, together with wind sails and other measures to be able to counter the Fuel EU Maritime cost and legislation. So together with the shipyard, we are developing such solutions that will benefit both the environment and of course our cost, our operational cost for these ships. So it's very, very important that the shipyard is in forefront with new technology and also is capable to implement this new technology in the ships. And I would say one of Stena's key takes is actually batterization for ships. And that is only applicable to ships that is not trading ocean going yet. But battery will be a large part of Stena's decarbonization in the years to come, I would believe.
Back to you, Captain. So among today's panelists, you are the only one who has not ordered a new build yet. So at a reasonable price point, would you consider building ships? And of course, China is not the only game in town. There are others. You are involved in the Gift City initiatives. So what would be your key, for first time, if you consider building ship for the first time, what would be your key considerations?
Let me make clear, I'm an investor who come in and move out quickly. So new building does not suit for a company of my size that invest today and get a result after 2.5 years. Market could have changed. Big shipping line, they can afford the fleet renewal. But company of my size, I don't think I have any future plan for next 2-3 years to new build. However, if I have to build, I think China is the first preferred options. And in that also, basically I will look for the time of delivery, because when you plan something, you know what time the vessel will be delivered, quality of ships, especially fuel consumption, new technologies, and the most important is the cost. So that's why China remains first options for me. And as of today, I can't tell you if we will build or not. Situation does change, but next 2 years, there's no plan. Thank you.
Wei Hong, So when the USTR port charges were first announced, we saw the share prices of Chinese shipbuilders fell quite substantially. That has now been postponed for a year. Do you see that coming back at some point in time? How has that affected orders at your yard? Has there been any discussions with potential people who are looking at placing orders?
For shipyards, I would say it's a mix of repairs. Repairs are still sort of a predominant part of the business. And for yard in Zhoushan, we have taken a couple of new building orders. Again, these orders tend to be sort of more bespoke. It's not your sort of conventional dry bulk or tankers. Although recently we have taken some tanker orders as well. But it's not a big consideration for us, given the repair business is still very much a core sort of part of the shipyards business. In terms of owners coming back to Chinese shipyards, I think just some of the conversations with our colleagues here with the Chinese leasing firms, I think with the suspension of the USTR, I think some of these projects that were previously suspended or sort of, yeah, they're actually coming back. Owners are actually coming back and talking to the leasing houses stuck in the shipyards. So again, it goes back to the fact that Chinese shipbuilding and financing is playing a predominant role in today's shipping industry. I think just the volume, whether it's on the new building front or in terms of the volume that Chinese leasing provides in terms of financing, it's not so easily replaceable. I think that's the reality of our industry today.
So at the beginning of this year, the US has placed a number of Chinese yards on the blacklist. To be clear, it's not a sanction list, that's different. So for John and Mark, where you have new buildings in China, with the increased geopolitical risk, is that concern, and how do you mitigate that risk? If the yard that you're placing orders at, should there be sanction, and you find yourself having difficulties making payments to the yard?
Shall I start? Yeah, as I said in my first words here, the China risk, and that is a little bit undefined. What is the China risk? What you brought up here is a blacklist of Chinese shipyards, and that is of course one concern. It could also come other things as a result from the trade war that we don't know about today. So it is a concern, both for building and financing in China, for sure. It is a big concern. That is a little bit now overshadowed over concerns about what US is going to do. Will they blacklist European banks for not supporting taking over Greenland, or these kind of things? You don't know. We don't know. Nobody knows what will come here. So that is an uncertainty still, but it's a little bit overshadowed. And for many ship owners like Stena, I think they see upon China as a stable alternative, actually, to what we see in US today.
Yeah, thanks, John, and thanks, CK. Echoing what John is saying, there's definitely still a lot of uncertainty, not only on this kind of blacklisting or any real sanctioning. And I think, first, touch wood, we have not had this issue come up yet, although I'm sure, because it's really more of a payment issue and shipping is still predominantly US dollar, I think we keep very close contact with our banks and payment parties, first of all, to make sure there's, if there's any update on these blacklists, they will be the first ones to know. Although I think today, given the abundance of Chinese shipbuilding orders, anything like this would be, you'll be reading it on TradeWinds the next day. What I do see is that Chinese shipbuilding market, as I mentioned, is very diversified. And through this diversity, I think you've developed a kind of resilience to this kind of uncertainty in sanctions, in blacklist, because unlike the previous eras where if you say, okay, all state-owned shipyards, okay, there's your significant percentage of all shipbuilding capacity. I think China's shipbuilding capacity network is now more resilient than that. And I think owners should take some comfort, although diligence and care still must be exercised for all payments and sanction risks. And we take it very seriously, coming from a banking background.
That's all I have for you guys this morning. Thank you very much for participating. Yeah, I would like to open up for questions from the floor.
Thanks. Okay, we have a few minutes left. So are there any questions, please, from the floor? Not really. Let me ask a question. I mean, if you watch CNN or the American news channels, I mean, there's a lot of kind of, you could say, anti-sort of Chinese sentiment. I mean, you hear a different story completely from what you hear in this room. I mean, in this room, people are pretty comfortable, I would say. Okay, these things are happening, but life goes on. China is so massive in shipbuilding and so massive in trade and so massive in finance that, even these tariffs, even whatever the US is trying to do, is not going to unduly affect how the world sort of works, I mean, so maybe I can ask you, starting with you, Mark. I mean, how much do you think is just noise, and how much is real, a real potential threat that somewhere down the road something more dramatic might happen?
Let me just start with, last night was the first time I went to the Bund in 20 years, actually. And I was amazed by how many people were out on the street, how well the atmosphere was, and on a Tuesday evening, no less, right? And I think the message I tell everyone, not just in Hong Kong but all over the world, is come to China. Go visit a city, any city, Beijing, Shanghai, second tier, third tier cities. You will always be pleasantly surprised by what you see, because, well, let's face it, the media does what it does best. But if you do come to China, you visit a shipyard. For us in the shipping business, you go and you talk to the people, and harking back to what I was talking about, the expertise and talent development, the second, third generation of people working in the shipping industry. And finance and others, you feel like the real expertise, the real commitment to industry, and I think that's the only way to get people to really understand. But all they need to do is come.
Okay, I mean, John, you're living here. I mean, what's your view on all this?
Yeah, I mean, you are partly right there, Kevin, for sure, what you said, and that is also sometimes what you are facing, talking to head office people that in some cases never been to China, even if they have a high position and so on. So China is still a little bit unpaved ground for many in Europe. And of course, because in such short time we have seen the Chinese development. And you said third generation. I'm not sure there, but I guess you have examples. What I mean is the development has been so quick, so immense. I arrived 2013, and I can barely recognize myself today in Shanghai what as compared to when I arrived. And in any European city, if you go back, it looks exactly the same. If a new building, you really eyes up, But so this quick development, of course, takes time for people in Europe and elsewhere to absorb. Also, you should have, you should so to say be aware of that. That's my point.
Thank you. And Captain Alok, I mean, you spend a lot of time in Dubai, a lot of time in India, so you're kind of in between. So what do you hear from the this sort of east-west, you know, dialogue?
I tell you, it's 80% noise. Okay. There will be some effect for risk-averse owners. Otherwise, it's 80% noise. Thank you.
Thank you. And sorry, Wei Hong. Yeah, I mean, you're in Singapore. Again, Singapore has pretty good relations with everybody, I guess. But you hear both sides of the story. What's your view?
I think a lot of us sort of, our career, it's always been a very sort of a dominant US kind of a presence, especially whether from an economic front or security front. And as the world moves increasingly into a more multipolar world, the geopolitical uncertainties are just going to increase. Right? That's just going to be a reality of life for all of us. And I guess as a ship owner that operates in a very global environment, I'll be a strong proponent of sort of diversification, a diversification of your portfolio, diversification of your assets, as well as your customers as well. Because at the end of the day, shipping is very much supporting global trade, and we'll still have to function, we'll still have to move goods around the world. And sort of having a diversified portfolio or sort of that diversification strategy will really help us to navigate all the uncertainties, which can be temporary, but I think the underlying fluctuations and volatility, that's going to be what we're going to see for a long time to come.
Thank you. And CK, a last word from you, perhaps? What do you think?
Yeah, I come from Singapore, a small trading nation. So I'm all for free trade, and free trade is good for shipping. And also uncertainty is also good for shipping with the pandemic and then the war. And as far as Chinese shipping and Chinese finance is concerned, I've been covering the Chinese market the last 32 years. There's been a lot of growth in this part of the world. You recall Marine Money in Singapore, we used to have more than 20 banks, European banks, sponsoring a Marine Money event in Singapore. And Chinese financing was almost non-existent 30 years ago. And today, some of the biggest financiers are Chinese.